Stablecoins and cryptocurrencies are the talk of the town right now. How does regulation impact these areas? When will digital assets become mainstream? I bet these questions are on your lips. So we brought BVNK and Mastercard to respond to them. The news about you being acquired by Mastercard was huge for sure. But how does your culture still survive inside this massive organization? And for your existing customers and partners, what changes, what remains the same?
We are very excited about the agreement that we've entered into with Mastercard. We really want to take stablecoins mainstream and to scale, and I think the best way to do that is through partnering with a network like Mastercard. For us as a business, we've always put talent first, and it really, has been a tech and talent acquisition. We've got certain skills and some of the best talent in the world building this stablecoin infrastructure, and we're going to continue to do that as an independent organization, own our own roadmap, execute at speed, and maintain the pace of delivery on that side. So, I think it was important to my co-founders and I to make sure that we kept that, and I think we fully aligned with Mastercard on that.
From Mastercard's perspective, what still needs to happen before we can say that crypto payments or crypto adoption is truly mainstream?
Yeah, look, in our Mastercard, it's very simple. The way we look at this is really about customer choice, right? We're not really here to say that people should use a crypto payment or people use a stablecoin. Since 2019, when we launched the first crypto card, now we have over 130 programs. It simply provides people access to the stablecoin balances around the world, wherever Mastercard is accepted, or the crypto balances. So it's really about that choice. We're not really here to say, okay, you must use a crypto payment. But when people do want to use it, we want to make sure it's really safe and simple to use. And that's why we are providing the access to the cards. That is why we have a compliance posture to make sure that everyone who connects to our ecosystem meets the requirements, our own requirements as well as the local regulatory requirements, so that it's a truly safe and simple payments for everyone involved.
Stablecoin checkout, I think, is exciting, and we do a couple of $1 billion of volume there, but it hasn't yet gone mainstream. But when it does go mainstream on the stablecoin checkout side, it solves that local currency collection problem where if you're an acquirer, you're processing a local card payment or a local APM, the money builds up in that market, and then you've got to settle cross-border and you're still running on old rails. If you do a stablecoin checkout, you're acquiring in stablecoins and that money moves instantly to be settled to wherever the merchant is. So I think it is that speed and cost advantage and that, trapped capital advantage that you get by enabling stablecoin checkout.
So how does Mastercard see the long-term role of stablecoins in global payments? Because we've heard about stablecoins a lot in the recent years, but particularly for cross-border transactions and settlements.
Yeah, so today, for example, in Mastercard Move connects to about 17 billion endpoints. Most of them are fiat endpoints where people can disperse money, gig economy payouts, all of that can happen. But as stablecoins enter, you see certain preference for people holding stablecoins in emerging markets. It could be LAC, it could be many parts of Asia and Africa, where these gig economy workers want to now receive stablecoin. That optionality can be extended now. So those are some of the early use cases. We previously talked about stablecoin cards, linked cards. That is a popular use case. If you choose to store your crypto or stable, how do you access it? So as I said, we have well over 100 programs around the world on this. These are some of the use cases, early use cases. We also see applications for this in corporate B2B payments, starting with SMEs, and over time extending into corporate treasury management and so on. So it is we are on that journey at the moment.
Your stablecoin utility report paints a clear picture when it comes to adoption. Are there any data, any numbers that surprised even you?
I think the number one that I would call out of that stablecoin utility report, we obviously surveyed 4,000 users across 15 different countries. How they're using, these were consumers, on how they use stablecoins in their daily life. And the one that popped up and stood out to me was 77% of respondents said that they would use a stablecoin wallet or stablecoin service if provided by their existing bank, which I think is a great data point for banks themselves to say, look, there's demand from your customers. You just need to input and bring that use case to life. And we're obviously working with many B2B payment platforms, but also some banks and increasingly more banks to bring stablecoin infrastructure and use cases to life within their customer base.
Institutional adoption of digital assets has accelerated rapidly in recent years. What changes make you most confident that the industry is finally entering a more mature phase?
Yeah, look, more people enter the industry when there is, first of all, a simple regulatory clarity on this. So that is the first one. The second, people enter it if you can actually provide solution that solves the customer pain point in a safe, secure manner. Can the security be guaranteed? Can you provide the solutions that are compliant with the regulations of the market? And if fraud is happening, can you identify, can you investigate? Those are the enablers, and all of that is getting more investment. We recently have a crypto partner program where we've added 130 providers are solving different parts of the ecosystem. So all of that increases confidence for institutions to enter, and we are seeing a lot more of that in the last few quarters.
Since you already mentioned your roadmap, what's on the roadmap for the next 2 years, let's say so?
Yeah, I think the most exciting thing today is adding and scaling our digital dollar wallet into more markets around the world. So, and adding really good features around that wallet. So once you have a wallet embedded into a platform, today they can send and receive stablecoins, they can do stablecoin payments, they can earn yield natively on that balance, which is amazing. It turns your checking account and your savings account into one account. And then we're also issuing stablecoin-linked cards on top of that. And then obviously working on a few agentic payments related toolkits to equip agents to get a stablecoin wallet, get a virtual card, and go out into the world and spend and transact.